Good morning, traders. I'm Michael Sabo, Senior Commodities Broker here on December 5th, coming to you here from the floors of RJO Futures. Bringing you some commentary here in the energy markets. So let's get started. Right now, we've got crude prices a little bit firmer here. What a difference a week makes. I mean, look at where crude prices are today. We're up about 70 cents right now, trading around 97.90. That's basis Jan oil. Brent touch weaker. That's off about 31 cents. We're trading around 111.57 there. That spread kind of narrowing back a little bit. And, you take a look at what we've got going on here. Recently, equity prices have actually been pulling back, but crude prices have really been jumping higher. And I think when you really look at what we've got going on there, I think you got a combination of things here. So let's get kind of started here. Well, on Tuesday, late afternoon, and of course, the market was already much firmer on Tuesday. We already had a pretty substantial rally in place. API, American Petroleum Institute, they released private estimates here suggesting a draw of 12 million barrels in the stocks. So that kind of caught the market by a little bit of a surprise. But the market had already moved there throughout the day. So, I think that had a little bit to do with it. But nonetheless, that report wasn't released to the later part of the day, and most of the move was already coming up. Then we come in here to yesterday. We saw EIA numbers come up. Now, traders were looking for a draw of about 600,000 barrels. That draw came in at about 5.7 million barrels. So certainly larger than expected draw. But yet, you look at the price of crude here, it was a little firmer, but we really didn't get any continuation of a run. And I think the big reason for that is because you look at our total stockpiles, we're still running over 40 million barrels above our 5-year average, over 14 million barrels over a year ago average. We still have very high stockpiles of crude at this point. We did get out a little bit of economic data that seemed a little bit firmer, a little bit of improvement. But when you look at the economic data that's been coming out, and I'm not just talking about over the last couple of months, think back here over the last couple of years. Granted, equities market looks dynamite, but that's a big function of all the cheap, easy money that's just been flowing, into the market that they keep pumping out there. But if you really look at the economic data, you get some good reports, you get some bad reports. It's kind of back and forth. We really haven't gotten a lot of reports, over months, over a period of 6 months, let's say, that have really just been very positive, very encouraging reports. You get some that are a little good and some that are a little bad, and kind of back and forth. And that seems to be the way it is. I really think we're just kind of still skidding along the bottom there. So I don't really buy into it that that's a good reason to see crude prices come up. What I think you got going on is a combination of things. One, I think short-term technicals, as we talked about, they were really oversold. They kind of moved a little bit more into the neutral territory, but the bears have been in control of crude prices. Look at the charts. Since about late summer, the bears have been in control. And so finally, I think what we saw after we saw about 3 weeks of consolidation here in November, then we kind of saw that market start breaking down a little bit. I think there's a little bit of short squeeze. Bears managed to get a hold of the market. Some of the weak longs, some of the weak shorts kind of jumping out of the market, some stops getting hit, things like that. Then you kind of take a look at what we saw going on here most recently. Now, we know that when the UN, the permanent 5 there, +1, voted to go ahead and lift sanctions on Iran, that was kind of seen as a bearish news for oil. Then you get our Secretary of State, John Kerry, making comments to Israel that, in fact, sanctions are going to remain. What's the deal here? I mean, they play on both sides of the fence here. To my understanding, the things that I've read still suggest that they are going to ease these sanctions on Iran. So I'm not quite sure what these comments are, if these comments are really taken out of context or not, or if this administration is just playing both sides of the fence here. So we'll stay tuned for that. But nonetheless, I still maintain an overall bearish view on the price of oil. Yes, it's been bullish here recently. I think if you look at the refinery capacity utilization, that jumped 3% yesterday. That's a big increase. We're running here about 92.4% versus our 5-year average of about 86.8%. A 3% jump, though, week over week is pretty big. And a lot of that just had to do with end of season maintenance that was kind of coming to a head, and they got these refineries back online, hence kind of absorbing some of this oil here off the market. Nonetheless, I don't think it's going to continue. I think there's some great opportunities to sell oil up here. So for those of you that have been, kicking yourselves for not getting in on the short side of this market while it's been coming down, this could be an opportunity. Now, short of some geopolitical risks that are still out there in the market or a big fundamental shift, of course, there's upside price risk. But give me a call, shoot me an email. We can get into more detail. I've got some ideas, some entry and exit points, what we can take a look at. So the number's on the screen. There's my email. Give me a call. I'll be happy to talk with you. And of course, remember that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.